Perfect. Let's
Okay,
go. Yep.
great.
Yep.
Okay, well, thanks to everybody for showing up on a Friday afternoon. We appreciate it. But this is something that we're going to do actually every week now. We mentioned before that we were going to start adding more services. This is certainly one thing that we want to do because I think it's important that we demonstrate what we're doing for you. There's often a lot of questions of, what are you guys doing on our accounts? And that's what we're going to do once a week. So it's great if you guys could show up live if you guys are available Friday afternoon. But if not, this is going to be recorded. We are going to set up a private YouTube channel just for the clients. That'll be done this week. So you can go back on the weekend if you didn't have time on Friday night, so you can review, and we'll discuss not only what Ben's done in the accounts, but also what's going on in the world and what we see happening for the next week as well. Just a couple housekeeping things. I think we'll do that as well at the start of these things. Just kind of mention anything that we see as far as National Bank's concerned and with the team, and even questions from our clients as well. A couple things. A bunch of you, or most of you, were on the Willing Wisdom. You see that's a bit of a glare with Tom Deans a couple weeks ago. We did promise the books. I've had my kids in the basement putting them together in the lockdown, so they're ready to go out. They'll probably go out Monday. So you can look for those books coming to your mail probably in early next week. Just so you know too, Anne brought this up to me, is that for those of you that get paper statements, CIBC always sent them out on the 1st of the month, and National actually sends them out on the 8th of the month. So I guess they technically would have went out today. I don't know if someone would have received them today, or you'll start to receive them next week. When you first see them, you'll probably notice they're different than the ones that you had before. Of course they are. I have seen them myself. They are pretty straightforward, but of course, if there's any questions, let us know. Okay. Which brings me to a couple other things. Next week we're going to announce our booking page, which is basically, as many of you know, like with any services now, you can book times online, right? We've actually developed a Hart Investment Group booking page where you can go on. So if you want to do a a portfolio review with Ben, you can certainly do that, or financial plan. You just go on the booking site, you select what service you're looking for. It'll allot that amount of time, and you can actually see what availability we have in the calendar for each day. So there's not that back and forth and kind of waiting for us to get back to you over a couple of days or whatnot. You can actually pick whatever time. It'll set you reminders. You can reschedule, cancel. You can manage all your bookings as you want, which I think is going to be a great service. It'll really cut down that time for us to get back to you as well, which is a big goal of ours for this year as well. So you'll see that come out next week as well, probably early Monday or Tuesday, Ben.
Yeah, I think so. Yep.
Okay, perfect. Just a couple more things here and we'll get started. The online access, for those of you who don't have online access yet, there is an extensive wait time if you call in that 1-800 number. I've heard that this past week because I guess they made some changes to the online portals for everybody across National Bank, which has caused everybody to have to reset their passwords, which I know is a huge pain in the butt and terrible timing for us. We're trying to get everybody onboarded for sure. But probably what the best thing to do is, for anybody that hasn't done it yet, is we actually have an email address that we can send it to. So if you just email me and say, hey, Scott, can you give me online access? I will then compile a list every day and send it to this email, and they will send me back the passwords for everybody, and then I can forward those on to you. I would just say give me 48 hours to get that done for you as far as realistic time frame, because I figured it'd be a day to get back to you, and then just if you miss that one day, then give me 48 hours to get back. But that's probably the best, rather than you sitting on the phone for an hour. Nobody likes to do that. It's infuriating, I know.
For sure.
And then I think one other thing is we had tons of questions after Tom Dean's thing, asking about estate lawyers who can help them with their will, stuff like that. And that's another mandate that we had for this year, was to update our professional network. And we certainly have some people that we've used in the past and recommend, but with our professional network, and as we update it, we want 10s. So if you have like a 10 out of 10, if you have a lawyer or an accountant or a realtor or a mortgage person, that you think is real 10 out of 10 that you want to recommend, that you would recommend to our whole client base, certainly forward that on to us, and so we can share and update our professional network. Because nothing better when you're looking for one of those professionals than to get a great recommendation. Somebody who's used it and had a great experience. So that'd be great if you could, if you guys know anybody. So that's it for the cleanup. I guess we'll get started with what have we been up to, Ben? What
Well,
have you been doing?
keeping myself busy. There's lots going on in the world. But first, the last thing I'd say, though, just before we jump into that, is we are still in that kind of transition process. We have been dealing with CIBC's back office every day, working on the transfers. We are continuing to follow up. So if all the money's not in yet for you, we continue to follow up on it, and we'll certainly ensure that it is. And we sweep those accounts for another 3 months as well after everything's transferred in. So dividends and interest and stuff that gets paid in the accounts, we'll make sure they get in.
Okay, great point.
Yeah. So that's it. That's it. As for what's going on, I mean, it's been a strange week, of course. President Trump and his crew, I guess, decided to storm Capitol Hill in hopes that he would have one last shot at keeping his presidency. So, the thing that I found the most interesting about this is that the market didn't care at all. The Capitol building was stormed. There was, people sitting in the speaker's chair, taking selfies, walking down the halls, stealing trophies, and the market just was ho hum about it. And so it's been really kind of interesting to think about that. The market seems to have been completely disconnected from what's happening around us now. After the last 12 months that we have, I think about, what's it going to take for the market to get disrupted? And I would have thought when I flipped on CNN and I saw the Capitol covered with people and police fighting with people that the market might sell off a little bit. And we did a bit, but generally the market was still up quite a bit that day. So, and then yesterday we saw, of course, Trump was banned on Twitter and Facebook. And so he did kind of put a post up on YouTube talking about his accepting the transition and, kind of having that smooth transition out of Biden. So historically, politics don't mean a heck of a lot. But, I think this was a really interesting year, contested election, lots happening there. But, what it comes back to, though, is that it doesn't seem to affect the market in any way, shape, or form. So, as I think about that and I think about how strong the market's been the last couple of weeks and months, I think about what's likely to happen these first two quarters are probably the inverse of what happened the last 2 quarters. And so, the sort of last year at the same time, we were going into COVID, and we had lots of panic, lots of fear, and if you look at economic activity the world over, we're in kind of that quad two, as we talk about, the kind of 4 different quadrants that I try to give you an update on. We're in that rising inflation and rising economic activity. And so as I think about what I own in the portfolio and what I want to own, I've spent this week trying to continue to reposition what I have. So I've sold some US long bonds and bought emerging markets, because typically emerging markets do better as the economy does better, as US dollar stays weak. So I've been shifting some of the bond exposure from long bond, US long bond, to emerging markets bonds. Been taking off some of the positions that did well, like any exposure to China. So the Chinese consumer, which I own through CHIQ and Chinese internet. So as the portfolios come in, I've been looking at shifting out of China, adding some exposure to Japan. Japan tends to do better in this kind of environment where the economy is expanding, the world's expanding, and China's starting to slow a bit there. So there's actually quite a bit to do, and I think I haven't really gone a day this week without doing something, even if it's a small change. Earlier this week as well, I'd added some financials, U.S. financials, and U.S. financials ripped after Biden was officially announced as the next president, and we started to see interest rates move up as well. So again, I've had quite a few questions this week about why are U.S. financials going up, and I think it's a pure connection to yields. So you've had the U.S. 10-year move through 1% for the first time in 2 years. So U.S. Financials tend to do better when interest rates are higher. So you've had a positive swing there. And so I think we're in that environment where a day like today, as I look at what's happened, the market was pretty quiet today. Just a couple of tinkering, fine tuning things I did. But the biggest, I think, sell off today would have been in gold and precious metals. And that's, I think, a combination of interest rates going up and a combination of settling of gold trades that happen every quarter. So we got futures contracts expiring next week in gold. So we're starting to see that put some pressure on gold stocks. I think gold will have its day in the second half of this year, but right now, I think underweight and a little bit less exposure than I would have had, we'll call it 12 months ago.
Got it.
Yeah.
Why don't
So go
why don't
ahead.
you talk about a little bit about too, one of the biggest movers in our in your portfolio, which has been MicroStrategies.
Yep.
And I think most of the clients too on here have probably noticed that, right? A lot of the
Mm,
portfolios are up significantly because of that, and
mm,
and how Bitcoin fits into that play.
sure. Yeah. Well, I'd say I think it's important to talk about Bitcoin and crypto for sure. So, MicroStrategy has been an interesting company, but I think Bitcoin is and crypto has been something that I think is really changing the financial landscape. I started talking about it as I went back through my notes prior to this meeting. I started talking about it in December of 18 and had lots of conversations and questions at that point when it was at 20,000, just before it got listed on the futures exchange. And I said, I think it's overvalued. I think it's not ready. And I think it'll drop 70, 80%. And it subsequently did that. But as I've learned about where it is now in the evolution, it's come a super long way from there. I attended this crypto conference early this year. I think it was around April, May that I attended it. And it's unbelievable how much money and interest is going into crypto and blockchain. And a lot of this last move has been driven off of the central banks continuing to print money like crazy and people looking for alternative assets. So when I bought Bitcoin for clients in May of this year, it's moved up, 250, 270%. It's something that I don't think I've ever seen in my career. And so I get a lot of questions about what is it, and so maybe we can talk about that. We'll continue to talk about that, but you know, as I've always said, when I'm constructing portfolios, I'm trying to look for something that is an uncorrelated assets to the other things. So, if I own gold, for example, I want something that works better when gold doesn't do as well. So you're looking for something uncorrelated. And really the key driver for me buying it this year was it was uncorrelated to everything else and continues to be the case. So, I think crypto is starting to gain a lot of traction. I mean, we're getting clients or client calls about it. I'm getting texts and messages from people that I know personally asking about crypto. So it is starting to gain a lot of strength. So, part of what we've been talking about, Scott, is we've been talking about what are the other things, what are the other spaces in blockchain and crypto that are interesting, and we've started to look at Ethereum. Um, And Ethereum's a little bit more of an infrastructure play than Bitcoin would be. The technical setup of Ethereum versus Bitcoin is really similar to where Bitcoin was 3 years ago. So I've started to investigate what are the best ways to look at some other assets within portfolios. Take some of those profits off that we made on Bitcoin, which I did trim at the end of last year, and reallocated elsewhere. And so, I know we're going to have some future calls that we can talk about this exclusively, but it's certainly gaining a lot of interest and traction at all levels. And it's been, as I've said multiple times, is the one opportunity where retail individuals like us and clients had the ability to front run the institutions, because right now the institutions are the ones starting to buy it.
Yeah, absolutely. And I think a lot of people too, when they think crypto, they think Bitcoin is kind of the sole asset there, right? But there's so many other opportunities. Like Bitcoin's kind of been the front runner forever, and a lot of people have jumped in. We're not even looking maybe that is the biggest opportunity anymore, right? That's kind of had its day. I think it's still going to go. It's going to continue to rise, right? But there's those other ones like Ethereum, that might even have a greater opportunity where we can get in on the ground floor, like where
Mhm,
Bitcoin was even 8 months
mhm.
ago.
Yeah. Yeah.
Yeah.
So as a sidebar to that, that's where I look at. I bought some Visa a couple of weeks ago for clients, and Visa has started to invest heavily in blockchain and crypto. Same with Square and PayPal. All these alternative finance companies are starting to put a significant amount of their capital or their R&D budget towards finding out how they participate and are there. I mean, the question I always get is what's the risk? And there's a singular risk that the central banks decide to ban it. And I think it's a pretty low probability now based on the move and the interest that it's had. And sometimes people get confused as we talk about central bank digital currency. They think, well, that's going to take over Bitcoin. Well, it's just going to be another version of dollars, Canadian dollars, US dollars, Chinese renminbi. They're going to make it digital. They don't want any money in the system anymore. So that's going to be a sidebar to the actual crypto that trades. So it's something that we can talk about in more detail as we go.
Yeah, definitely. And we certainly don't want to turn these weekly
Yeah.
roundups into
Yeah.
crypto talk. So but it's easily the biggest question that we get from clients right now, because it's easily the biggest mover in the markets, and
Yeah.
people want to know, and nobody knows what it is,
Yeah.
right? So
Yeah.
we're definitely soon in the coming weeks going to do a couple of special presentations just on that, explaining exactly what it is and what we
Mhm.
think the opportunities are, and what we think the risks are as well.
Yeah.
So.
Yeah.
Yeah.
So I
Right.
guess maybe a couple things we can talk just about what I see next week and what I'm thinking about as we get into this year. Obviously, I am going to do a full presentation at the end of this month where I'll give my kind of outlook for 12 months and give a more detailed look back on some of the things I talked about last year. But I do think that we're in for a period of this inflation and growth. And it's really because we had such a horrible first quarter of last year that the year over year numbers are going to be better than last year. I don't think that they're going to be outstanding. We're not going to get back to peak levels, but it's really the rate of change of the numbers right now that things are going to look a little bit better than last year. And I think there's more risk that the market kind of melts up a little bit right now. And so as I've been putting cash to work, it's been to take more risk, and it's to look at building on some of these things that do well in this environment. And so I've bought I think I mentioned some of the names that I bought, so I'll continue to look to do that with industrials, consumer discretionary, both from an ETF and individual stock perspective. I bought a little bit more EPCG, which is a U.S. financial, today, and I continue to look when things sell off. It was down 6% for no reason today my view. So I added that to the existing positions, and I'll continue to take advantage of that. Where when I sold China and bought Japan this week, it's taking something that went up 20% and that's down 5, 6, 7% in a couple of days, and recycling that cash.
Got it. Yeah.
Yeah.
So just before we go on here, why don't we just give people an opportunity? If anybody has any questions, anything that specifically jumped out at them throughout the week, put it in the chat function here in Zoom, or can they raise their hand too? Is that
I
on?
think
Do
they.
we have
I
that
think they.
activated?
Yeah, I think they can. They can raise their hand if they want. Okay.
Oh, Anne raised her hand.
Okay.
Thanks, Anne.
Let's
What do we have to
see.
do there?
I'm going to allow her to talk here. How's that?
Okay, great.
Oh.
I was just showing you that it works.
Oh,
Right,
you're showing.
Yeah,
That's excellent.
That's how it works.
There
Okay.
you go. Okay.
Okay. So if you raise your hand, we can give you access to audio, and if
Perfect.
you dare, video.
I'm gonna take you back out. Thanks, Anne.
Okay, no questions yet, but if something comes up, then certainly ask a question. No problem with that at any time. Okay, so what do you got coming up for this week? Anything else?
No, I mean, I think as we progress towards Biden coming in and taking over, I think that's going to bring quite a bit of calm to, I'd say, politics. And there's a greater likelihood that we start to see more interest in what's happening in the real economy again. I still think it's extremely disconnected, and liquidity is a big driver. So, I'll continue to look at what's happening on a day-to-day basis, and not be afraid to take advantage of uh, opportunities in the market. Like I say, when stocks trade down 5 or 6% in a day, and the market's fairly down, that's a good opportunity to use that cash to buy it. So
Yeah.
So
that's probably a good question, maybe to end it off, is, and it's kind of a big question, is, so why do you think the market is so disconnected to the way the world looks right now? Right. I think that's probably another huge question that we get all the time is, pandemic, the jobless, the unemployment rate just came out today, right? That was negative. So yet the market just doesn't seem to care. Why do you think that happens?
Yeah, so I think it's a great question, and it's something that I've battled with and learned over the years. And presently, right now, this market's driven almost exclusively off of liquidity. So as you look at, and some of the comments I've made, I guess in the last couple of weeks on the dailies, one of them was, 40% of all US dollars in circulation were created this year. So there's just so much money that's been flushed out into the system. They're looking for assets to buy, and they're pushing them higher. So, one of the things that I read this week, and I've often made references to what's happened in Japan in the 90s. And so, Japan got to a similar point where they were trading at, we'll call it kind of 35 times earnings, similar to where the S&P is today. And a lot of prognosticators said the market can't go higher. It's impossible. It's true. This is historic valuation levels. But there was so much money flowing into Japan and Japanese companies, and the Nikkei was looking for places to put that capital. And so Japan went from 35 to kind of 60, 65 times earnings. So essentially double the value that the market thought it could be. So as I start to think about it, I think that we may have a similar setup there. The biggest challenge with that is every day that this market extends, there's less levers for protection. So as I look to put protection back into portfolios with puts and things like that, I do look at the volatility in the markets, and there's still kind of elevated volatility. So puts aren't super cheap. I do think we're kind of going with a similar backdrop where there's so much money in the system, and there's no places for it to go. So it's pushing valuations higher, and the economy is really kind of secondary. I think it'll matter again, but just not today.
Yeah, for sure.
So,
Uh,
so we
yeah,
got one question there. Yeah.
yeah, for sure.
Okay, I'll bring you in, Lyle.
Okay. Hello?
Okay, can you hear me?
Yeah, I can hear you.
Okay. My question may have partly been answered by your last point, Ben.
Okay.
But in general, for the last several months and looking ahead, everything projects towards a very buoyant marketplace.
Yep.
Interest rates are staying low. Central banks are not moving off that strategy. They're going to continue to add to their balance sheet. Huge liquidity. Bond interest yields are going to stay low. It's going to drive inflation. And the risk on sentiment in markets, particularly in the US, seem to have no end in sight. Everything, despite the destruction in the economy and the lack of consumer purchasing, everything points towards increasingly buoyant market and potentially at a scale and a price earnings ratio that's historically out of whack with reality. So my question is,
Sure.
what are the main combination of factors that combined together could cause a collapse in that scenario?
Mhm.
Which are the factors which, because it would need to be some combination, no one single thing would do it, I don't think. Anyways,
Yeah.
what combination of factors can cause a collapse in that scenario?
Mhm.
And what indicators would you watch to see that those factors are starting to coalesce towards that collapse scenario?
Yeah, so it's a great question, and I think it has a lot to do with the watching the economic data on a daily basis. I think that what is the specific thing that's going to tip the scales? We have huge leverage in the system, so I think if the central banks change their tone, which they haven't yet, but maybe they do, if they change their tone where they start to say we may tighten, we may significantly reduce our purchasing of assets, and you start to get a potential crack in the current foundation that we have. So I'd be watching what the central banks are saying and doing. I'm watching very closely what's happening in bond yields, particularly US bond yields. So if they allow this, the 10-year and the 30-year to continue to creep up, it might be a signal that, there's other place to put your money, like out of equities, out of risky assets into safer assets. Then you can buy a 30-year at 2%. So, I'd be watching those pretty closely. And as for the economic data, right now, until you see the fiscal authorities say we're not going to support individuals anymore, they're they've bought the support of people making money by giving out continued CERB and these guaranteed income streams that people are getting. So until those two things stop, where you get monetary and fiscal authorities changing direction, which I don't believe is happening anytime soon, those combination of those two things I'd be watching very closely.
Very good.
Yep. Okay. Thanks, Lyle.
Yeah.
Okay.
Good.
Yeah, I mean, we're getting a half an hour here. We could talk for 3 hours easily. And that's a great time so as we wrap this up, that's a great time to plug our new podcast that we have. So some people obviously are more engaged with what we're doing on a weekly basis with and how we see the world just like this. So we're gonna right after this, we're going to actually record our first podcast, which will announce where you can listen to that. So you can, what we're trying to do is give you as much information as we can and let you pick and choose for how you want to consume it, right? So if you want a video, you're going to have your own private YouTube video or your YouTube channel.
Hmm.
right? If you wanted to you listen to it while you're doing something else, we're gonna have a podcast for you, right? You still get Ben's daily emails, which we're gonna turn into a written blog, right? If you wish to consume it that way. So we're not trying to inundate people with information here. What we're trying to do is just give them the best way. In today's day and age, we have all those tools to be able for them to do that. So
Yeah.
the podcast will be, this will be available, or the first podcast will actually be available next week. So look for that as well.
Yeah, for sure.
A-
Yeah.
Anything else, Ben, that you want to round up with?
No, that's it. I mean, I think the whole reason behind this, as we went through this move and the transition from Wood Gundy to National Bank Financial, you know, I tried to take as much, we tried to take as much feedback from people as we could, and this was one of the questions. You know, as I look through accounts throughout the year, you know, I would do 50, 60, 70 trades in an account, and oftentimes, you know, obviously most of the times we didn't discuss a lot of those things. So I want to try to bring that to the point where you're understanding how I'm making decisions throughout the year, what I'm thinking about, why I'm thinking about them, and hopefully that helps with the understanding for positioning. So we're trying to deliver what you've asked us for, and that's the whole rationale behind this.
Awesome. So yeah, if anybody has any questions ahead of the next one, so we're going to do this weekly, every Friday, 4:15. We're going to do this weekly. So if anybody has questions ahead, you can email Ben or myself. Everybody has our contact info, and we'll address specific ones. Or you can ask questions like the one that we just got right now.
Yeah.
Do we have a new question there, Ben?
Yeah, yeah. So Jose was asking when the online booking portal is going to be open. So
Yeah, it's ready to go. So as soon as we send out it'll be ready early next week. So probably Monday or Tuesday, we'll send out the email, and we'll be ready to go.
awesome, perfect.
Okay, well,
That's
thanks
good.
for everybody for tuning in, and we'll send out a link for next week. Next week. Thanks.
Great. Thanks very much.
Okay,
Take
guys.
care.
Bye.
Bye.